Gold has been edging higher over the last couple of days, pushing back towards $1,480. But at this moment in time, it still continues to look vulnerable to the downside. This is where the path of least resistance potentially lies. The clear reason for this is the fact that we are seeing an improvement in risk appetite in the markets. You take a look at US equity markets on Wall Street, and we've got the S&P 500, the Dow Jones, the Nasdaq, all trading at record highs. Look across Europe, we are seeing highs in many indices across the continent as well, and even in Asia, even in the parts that are looking a little bit more vulnerable right now, particularly around China and Hong Kong. At the start of this week, sentiment has been improving, and with gold being a safe haven asset, this does not bode well for the yellow metal. Now, there are other factors as well which has played into the vulnerability in gold. The Fed has cut interest rates 3 times now and now is on hold. It's ended its mid-cycle adjustment, which suggests that at the next few meetings we're not going to see any further easing measures. So any easing measures that we've seen so far has been fully priced into the markets, and next year expectations are far lower. Other central banks around the world have joined the Fed in cutting interest rates as well, and they may now start to take a step back also, again taking away some of the upward pressure which we could potentially see building in gold. And what we've seen from a purely technical perspective, if we take a look at the charts, is that 1480, which would have long been a key area of support, it actually broke about more than a month ago, maybe 6 weeks ago. We saw that initial breakout, and it consolidated in the aftermath of that. So it really dragged its feet to begin with. There was a lot of bullish momentum, a lot of bullish appetite for gold around this time. So we did see it bounce back and consolidate around those levels. There was even scope that it could potentially move higher because we were starting to see higher lows being built, potentially some confidence growing amongst the gold bulls. But again, they finally did break out to the downside. 1480 fell, and since then we have traded in these lower regions. In terms of key technical levels to keep an eye out on now, 1460 fell. We're looking around the kind of 1440, 1445 levels. Last week we did see gold actually run into support around 1445, right in between that support band. We have seen a rebound at the start of this week, like I say, a technical rebound at the start of this week, partially being driven by a little bit of sentiment being paired across wider markets. But even still, we're moving back into that 1475, 1480 zone. Previously a massive area of support, now a really crucial area of potential resistance. If we break back above there, that would suggest that bulls are taking hold again. But what we've seen already is that once it's hit that 1475 level, already we're starting to see some profit taking, potentially a little bit of rotation as well. I think many people are looking at gold right now and seeing, like, say, the downside being the potential path of least resistance. Now, none of these things are ever guaranteed by any stretch of the imagination, but if we can see a nice rotation off that 1480 resistance level, then all of a sudden 1440, 1450 starts to look vulnerable once again. And a break of this potentially then opens up a much broader move, maybe back even towards the low $1,400 levels. Of course, again, this is just reading technical support and resistance from previously key areas. But at this moment in time, these are the areas which I think many people are going to be keeping an eye on for the yellow metal.